Now, the enterprise fund, this is going to be, remember, our airports. And wouldn't you know it, I failed art class, and there's an airplane. There, it's beautiful. It's absolutely beautiful. But I passed the exam, so now I spend my free time drawing pictures. You will do that as well once you pass. It's a nice way to relax. Beautiful, absolutely beautiful. All right, so this fund accounts for normal business type operations that the government performs. They serve external uses of the government, like we mentioned, citizens. These are going to be public utilities like water and electric. I said water, and I think I almost said fire before. I'm thinking of all the elements, right? Water, fire, earth, and air. Now, so they don't give you fire; they take fire away. They try to put fires out. So water and electric utilities, public hospitals, public universities. Again, questions, it'll specify, it'll say a non-governmental hospital or non-governmental non-for-profit. But if it doesn't say that, then it's a public government one, right? It might say a governmental, government-owned hospital, government-owned university, a public university. What about other commercial activities? We've got swimming pools, your local swimming pool, your parking garages. What about public housing? That is another business type activity. Your New York City transportation, wonderful subway, public golf courses, lotteries, and airports. All of these are going to be set up through the proprietary fund, the enterprise fund. Again, think of it like you're setting up an LLC. Setting up that LLC is this new fund. It's a new bank account. And then that fund owns these activities, the fixed assets, everything here. So laws and regulations require that these services be recovered through fees, right? That we pay for these through fees. You pay for the water utility system and pay for the buildings by charging customers, by charging the citizens. You pay for the university by charging tuition. You pay for the swimming pool by charging people to come in to the swimming pool. Now, I mean, in reality, you might be thinking, oh, but maybe my public swimming pool is free. This is the government at its textbook, right? I'm sure there's a reason for that in reality, getting its funding somewhere else, but this is textbook how it should be happening. All right. And let's move on. Revenue sources for our enterprise fund. Revenues for enterprise and all proprietary funds, so that's just internal service and enterprise, presented by a major source and distinguished between operating and non-operating. Classification of transactions should be consistent in the statement of cash flows. All right, so operating revenues, literally same thing as we just saw before, right? If we have a golf course, fees to play golf are going to be operating revenues, and you are going to, if you pay to have someone take care of the golf course, those are operating expenses, which we'll see in a second. Miscellaneous operating revenues, maybe you have a little cafe on the golf course that you charge people for. Those are operating revenues as well. Classification all the way. Non-operating revenues, this is going to be taxes, interest, anything not involved with the direct portion, direct purpose of this activity. Expenses, nothing too out of the ordinary, right? If we depreciate the golf course, if we pay to keep it running, we pay to water it, we pay people to take care of it, those are going to be operating expenses. And wouldn't you know it, again, we mentioned interest expense because what else really would there be? But if it doesn't fit into this category, it's non-operating. Nothing too crazy, right? This is pretty enjoyable. I'm enjoying it. I hope you're enjoying it as well. And if you're not, well, maybe you'll enjoy the next one. Capital contributions. Now, what if we want to establish the enterprise fund just like the internal service fund? Well, capital assets are contributed to proprietary funds by governmental funds. So again, if we've got construction going on in the capital projects fund or in the general fund, we can transfer it over to our enterprise fund. They're reported separately below non-operating revenue and expense section of operating statement, not classified as transfers. So these are not transfers, same exact thing as the internal service. These are non-reciprocal, meaning we are not going to have to pay them back. We debit cash and credit capital contributions. This is kind of like an equity account that we probably have seen before in the equity section. Probably seen this a lot also in partnerships. Continuing on, we can also use debt or another long-term financing agreement to keep our operations going, to establish it, to set it up. So we can use debt to help finance operations, which can be paid with revenues or be backed by the proprietary fund. we're going to borrow money to build the airport right away, so we don't have to wait to do it, right? We need initial cash inflow to do it. Thinking of LaGuardia right there, used to be one of the worst airports, but it is starting to look beautiful there. Fly into it and out of it a good amount. So they probably, when they did that, used their enterprise fund. The city of New York used their enterprise fund to establish it. They borrowed a lot of money from, I don't know where they would have gotten that much money. And they would have debited cash and credited long-term bonds payable.